Yeah, hello guys, I welcome you back to my YouTube channel. I'm by name Chris Anya, as you all know, CA Forex, and we are officially went on break 22nd of this month, and we'll be resuming on the 3rd of January. So if you're not in our Telegram group, there is a link below in the description box that will lead you to our Telegram, our channel, so that you can access our free signals and our mentorship that will be starting on I think on 17th of January for just affordable price, and then so many things so that you won't be missing out. And so today I just felt like dropping a video, and then the video is about, because I was able to ask some people and they'll be like, this year was not that nice in trading, and then I just want to share a simple secret why people lose trade despite they know how to trade, despite the analysis as well. Why do they lose trade? Why do they lose trade in forex trading? This video is very simple and it's going to help you a lot. So stay tuned.
Why do we lose most of our trade? Is some people know how to trade, some people have the idea they can analyze, but they still lose trades. So why do they lose trade? Now, before I just go into it straight up, trading is simple. Okay, trading is simple. It's just trading have rules. Once you abide to those rules, then you actually make money from trading. Our general goal is making money from trading. So trading is as simple as ABCD. So it's as simple as ABCD. I'll be showing you that simple secret why people lose trade, why traders lose trades upon trade, despite they know how to trade, but they still lose trading. They have nice analysis but still lose trade. All right, now there are some 3 steps you guys have to see. 3 steps you need to see. Okay. Yeah, so people lose trade because they don't keep to some things. As I've said, there are some things people don't keep to. Now, do this in 2022 and then you win trades. Now, so there are 3 things you need to do as a trader. You want to be successful in everyday trade, whether a day trader, a scalp trader, a swing trader, any kind of trader, or you trade VIX, you trade currency, you trade gold, you trade, stock, and any kind of trading. When you keep to these 3 things, believe me, you will come out clear. Remember, I said trading is simple. Okay, I also make this video as simple as possible so that you get to understand it and know what I'm talking about. All right. Now, so these are the 3 steps. Number 1, have a trading plan. 3 things. Number 1, have a trading plan. Now, it's so funny that some people don't even know what a trading plan is. Okay, and they trade, and then they are trading live accounts. They don't know what a trading plan is. Number 1, have a trading plan. Number 2, observe proper risk management. And then number 3, trading psychology. So we'll be starting with the first one. I want it to be fast, short as possible. Starting with the first one, trading plan. What is a trading plan? How does it look like? Let's go in it. Okay, so this is a trading plan. This is how it looks like. Okay, this is just a kind of a quick outline of your trading plan. Now, a trading plan has to contain a trading routine, your strategy, and then your money management. A trading routine, your strategy, and then your money management. Now, a trading plan, the first part, which is your trading routine. Okay, your trading routine. Now, if you look at this, talking about your trading routine is that you kind of what time frame you want to trade on. Okay, what section you want to trade on. Like when it comes to the currency traders now, market normally used to be volatile between 8 a.m. to 5 p.m. That's Nigeria time. So what time frame you want to trade on? What session? The UK session. I trade in the UK session. I trade from 8 a.m. to 5 p.m. Now, so have a trading routine. This is how your trading plan is supposed to look like. Your time frame, what time frame you want to be trading on. Then your trading session, what session is preferable. If yours is from morning till 8, fine. If yours is from 8 a.m. to 5 p.m., fine. But have a trading plan. Now, this is something that many people don't know. This is something that people just trade anytime. Some people, they all trade over the day. Now, as a day trader, this is what you are supposed to put in mind. What time to time do I trade? What time to time do I trade? If you're a swing trader, it's something different, okay? But as a day trader, what time to time do I trade? Have a trading time, a trading session. Now have a time frame you take trade on. Now as a day trader, you're supposed to be taking trade from 15 minutes, 30 minutes, 1 hour. Okay, you don't come and be taking trade from day one. Okay, those are things that swing trader do. So know which time frame that suits your type of trading. Number two, your trading strategy. Now, your trading strategy, what kind of trade will you enter? What kind of trade do you want to enter? What kind of trade do you want to enter? Okay, and then your trading strategy has to do your analysis. Like me, I'm a price action trader, so I wait for ABC. When I see ABC, then I do D. When I see this and this, then I trade. Okay, so what do you see before you trade? Your strategy, is it that you just trade trend line, resistance, support, chart patterns? Just at least, remember I said before going to a trade, you have at least 3 confluences. So what do you see before going to the trade? Have a trading strategy. If you are using indicator, okay, maybe your indicator is moving average, Fibonacci, and CCI, and then you'll be like, because of maybe you are like, oh, the sell is already ripe, you're already going into it. No, don't just rush into trade like that. Wait for your trading plan, your trading strategy to reach the point. Okay, like I have 3 confluences, as I've said. Maybe for example, at least 3 confluences on a chart. I see maybe a trend line, a order block, and a chart pattern, and then actually wait for candlestick confirmation. That is me now. And then without seeing those things, I don't go into the trade. That is the way to keep yourself from losses, because some people they go into the trade without seeing the the A, B, and C they are supposed to see before going into the trade. Now wait, every first leader that is successful today, they have this virtue called patience. I was telling someone recently that if you want to see someone that have patience as a virtue, look for a forex trader, because a successful forex trader. Why? Because successful forex trader, they wait for price to reach their point before going to a trade. Don't just go into a trade. Like me, I recommend confirmation. Like before I go into a trade, despite I know that maybe chart patterns, order block, trend line, psychological level, and then some other stuff I need to see before going to the trade. High of the day, low of the day, high of the week, low of the week, all those kind of things. Despite I know that these are the strategies, these are my analysis. I wait for confirmation. I wait for candlestick confirmation before going to the trade. So what? Have a trading strategy and stick to it. Now, the next part is your money management. It's more over like the risk management. Okay, what happened? Let me just go into it fast. Risk management. Okay, risk management. Now, risk management is more over like the amount of money you are willing to risk in a trade, your stop loss, your profit target method, and then minimum risk reward. Okay, the amount of money you are willing to risk in a trade. Now, if you look at this is risk. Okay, now I'm about going into a trade, and then I have $100 account, and then now I do normally say something to my student that before you go into a trade, risk the amount you are willing to lose. That if you lose this amount, it won't actually hit your nerves. Now, risk the amount of money you are willing to risk, you are willing to lose in a trade. For example, now I normally tell them that they risk at most 10% of their capital. You have $100, you don't risk $50 on one trade. Risk at most 10% of your capital. Flipping is something different. And when it comes to flipping, you are willing to risk everything in your account. But when it comes to risk management, people that don't ensure proper risk management, they might, maybe you trade 6 trades in a week, and then you get four respect to analysis, 2 doesn't, and then you are still living that week with loss. Why? Because of what? You don't keep to risk management. Now, for example, you are So for example, you are kind of risking 1%. You should be your reward should be 1:3. So this is your kind of your risk to what to reward ratio. Risk to reward ratio. How much are you willing to risk in a trade? How much are you willing to risk in a trade matters. When you keep to these things, you take 5 trades, you lose. When you take 5 trades, you lose 2, but you trade these 5 trades with proper risk management. Believe me, you will still be in profit. So trade with proper risk management. Now this is something, okay? Imagine you use 1:2, okay, as your risk is to reward ratio. Okay, let me just take this off and then I'm coming. Okay, you use 1:2 as your risk is to reward ratio. Okay, and then in a month you took 50 trades. You took 50 trades, and then now you took 50 trades and you lose. Okay, 25 went against you. 25 went against you. Now, and 25 went for you. Okay, let me just wipe this off. You took 50 trades. Remember, you use 1:2, and then 25 went against you. 25 went for you. Now, that 25 that went for you, since the ratio is 1:2, you won. That is to say, for example, you lose $50. You use $50 your risk, and then when you win, you are making 10. So you use $5 your risk. When you win, you're making $10. Now, so because of this, that says you lose 25 and you win 25. Now, because of your risk to reward ratio is 1:2, you will still be at the winning side. You will not be at the losing side. But if you don't keep to risk to reward, you risk more than you gain. Then you're actually a loser that month. But if your risk is to reward, your reward is more than your risk, then you are actually in profit. So ensure proper risk management. Ensure what? Proper risk management. Number three is your psychology. This is the part people don't actually listen to. Now listen, trading, your analysis covers only 10% of your successful trade. Number 2, your risk management covers 30%, and then psychology covers 60% of your psychology of your successful trade. Now people don't actually take this serious. Psychology. Now psychology. Now, I do say some things, like I do say things to people like, what you do before going into the trade doesn't matter. Sorry, what you do after going into the trade doesn't matter. What matters is what you do before going into the trade. It is before going to the trade, you set your analysis. Before going to the trade, you calculate your risk management. How much am I willing to risk, and how much am I willing to gain? Okay, these are the things that actually matter. And then your psychology also before going to the trade. If you are not in a nice state, don't trade. Imagine you are down emotionally, and then you are going to a trade. You actually be up and down. Okay, price is rejecting a little bit, and then because of fear, because of you are down emotionally, let me just close the trade. Now trade at a right frame of mind. Trade when you are actually right, when you're actually normal. Now psychology makes people actually lose trade. Fear, psychology has to do with fear, emotion, and then so many things that has to do with the mind. Now if your psychology is messed up with, believe me, as a trader, you will actually be really frustrated. So make sure you keep your psychology intact. Now let me come over it again. So trading analysis, have it. Trading analysis, just like I will see A, B, C before going into the trade. I have to see A, B, C before I do D. See A, B, C before I do this. Okay. Number 2, your risk management. How much are you willing to risk in a trade versus how much you will be gaining? So if it is, and put it in a ratio form. If it is 1:2, you are still winning at the end of the month. If it is 1:3, you are still winning at the end of the month. Okay. And then number 3, your psychology. your psychology. Remember this key thing I said: what you do after you have gone into the trade doesn't really matter. It is what you do before going to the trade. And if you keep to this, believe me, you actually be having winning trades. Okay, I believe this video have helped you one way or the other. And then if this video has really helped you, you can just like, subscribe, and then if you have any question or you want me to make a video on a particular thing that's actually disturbing you in trading, just drop it at the comment section. There's actually a link below, as I've said, that will lead you to our Telegram so that you can get across to us, and you can also partake, you can also join for the 21 days course that will be coming on, that will be starting January 17. All right, now, so you guys have a wonderful day. See you in my next video. Thank you.